Micron just had an earnings report, so what's going on with them? Read these charts from right to left. Each point is a quarter. In the last 4 years, see how revenue per share grew from just under $6 to about $7.50, with a big dip in the middle. This potentially looks like Micron has been seeing a big upswing in revenue over the last 2 years. Revenue growth per quarter. Watch the red line as it shows a smoother average. Revenue growth appears to have been in a recent upswing, but last quarter seems to have something like a 5% dip in revenue. You can see the hit in the middle and recent recovery. Total assets and debt. 4 years ago, debt to asset was about 25%, which is easily manageable, but the debt has been stacking up like crazy. Last quarter, the debt rate was 98%. Revenue is back up, but at what cost? A high debt ratio is a massive red flag. Book value per share. Or, when you buy a stock, how much money in assets minus liabilities is it backed by? 4 years ago, it was up at about $15 per share. Now, looks like under $1 per share. Probably mostly due to the huge amount of debt Micron has been stacking up. Here's the book value growth. Look at the average red line. It generally is under the 0%, which looks like the company keeps stacking more and more debt. Recovering revenue, but at the cost of higher debt? Debt is a big risk factor, and limiting risk is a huge part of being an investor. Let's see if they start putting some of that new revenue into paying down their debt. Here's the price chart of the last 4 years, left to right. You can see the trough from falling revenue, and a huge recovery in price due to recent performance. Seems like most money thinks returning revenue is good enough to justify a higher price per share. What do you think? Subscribe for more actual stock analysis.